Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We're going to check out a couple of more aggressive growth stocks now with Bill Wilton, our aggressive growth stock strategist at Zacks.com. And one of the aggressive growth stocks that you've written about recently is Amerco, which is really UHAL, UHAL, the ticker symbol.
Yeah, they also are a parent company to a couple insurance companies and a real estate firm, but those are a very small portion of the balance sheet. As you can tell by the ticker, the predominant business that they're in is the U-Haul,
right.
Those rental trucks and also the storage space.
Right, and have been for a while too.
Yeah. Definitely. But, they reported their recent quarter. They've seen revenues up about 7% to $444 million. Now, this is a seasonal business, so they did see a loss, but it was about half of what analysts were expecting. So that's still an earnings surprise. So the trends are going well. This is their third consecutive surprise. They are on a roll there. The other thing I like about them, they're trading at a good value. They're at about 13 times forward earnings after we've seen those estimates jump. So the forecast, as you can see, I highlighted, we're at 432 for this year, which is a 58% growth rate if they're able to hit that mark, which would be obviously a very good quarter for, or pardon me, a very good year for them. As the economy rebounds, people have more of a need to move, store things. People can hold on to things they would normally have to get rid of when the economy is tough.
Is it that end of the business that's showing the growth, or is it the insurance end because of all this mandatory insurance business that we've been hearing about?
Well, the insurance is a very, very small portion of the business.
Okay.
I mean, you're looking at a national scale as far as these rental units go,
okay.
And you can see them all over the road. So
right.
That's essentially, I mean, for all intents and purposes, that's their business, is the U-Haul.
Okay.
But one other nice thing about that quarterly report is that they broke out of a bearish trend. You can see that they were trending downward, and then right after they announced those earnings, shares popped and they kept going. You can see a turnaround in the MACD. It's showing a very bullish signal there. So things are looking very good for them going forward, especially after they took out the recent high, which is something that I always look for. Okay,
and then there's Steve Madden, SHOO, the ticker symbol, and that's primarily because they make footwear.
Yeah, they're kind of that middle of the road. They make casual footwear that's reasonably priced, so it's a very good segment. In their last quarter, they reported revenues up about 24%, and that also came with 14% improvement in their comparable store sales, which is something that we always like to see. That means, they're getting more foot traffic per store that's been there. They're not just opening new stores to grow that way. So it's a good combination of growth, as far as new locations and as far as, more customer traffic, more people spending money at those existing stores. They also saw an improvement in their gross margin. So obviously you've got more sales, you're more efficient. That produces better earnings results. So, their surprise added to a pretty good history over the past 5 years. They've shown very solid earnings results. And they also have very good valuations as well. After their earnings revisions, they're trading at about 14 times forward earnings. And the growth rates, we're looking at 34% this year, another 11% next year. So, that's obviously pretty good, especially for these retailers. A lot of people are saying that the retail stocks are out of favor right now, which has led to a lot of good value out there. But, I'm one of them that said the retailers are out of value, but as long as these numbers keep coming in, they just keep proving us wrong. So it's a very good space to be in. As far as the chart goes here, this big jump on the left side there, that was for a reverse stock split. The chart hasn't been adjusted for that, but we are seeing some good support for shares of Steve Madden. So it makes for a very good entry point. Relatively lower downside risk, and given these growth rates, given these valuations, there's plenty of upward improvement.
All right, do you own either of these two?
I do not.
All right, check out more Zacks Rank Buy stock pick ideas for yourself on our homepage at Zacks.com. Upper right-hand corner is where we put 4 new ones for you daily, one in each of the categories written about on Zacks.com and with Bill. I'm Terry Ruffalo.